I talk a lot about M&W patterns or engulfing candle patterns. Now, I want to talk in this video about 5 things to know about fake outs while trading. And this is really to highlight fake M&W patterns. And the reason is because everyone is doing the same thing. Candles or M&W patterns or pregnant ladies, we're all doing the same thing. And that's exactly why I spent so much time losing, is because I was trying to do the same thing as other traders. So that's why we're going to expose the fake M pattern in this video. So first things first, let's go over the 5 things. I'm going to type those out and then we will discuss. Okay. So the first thing is that the first thing you should know is not is a reversal. Okay. Not every M or W pattern is a reversal. And I say that because sometimes when you're trading, you'll notice what looks to be a pattern. And you're like, oh, I know that this is the M and W pattern, or this is this, or this is that. And then what happens? It fakes out and it goes the other direction. And so, what I need you to know is that M and W, not every M and W pattern is a reversal. Context matters more than the pattern itself. And so that's going to lead into the second point here. But just know that not every M&W pattern is a reversal. And we're going to talk a little bit more on the chart about why this one was not a reversal. Okay. A little bit of what we have in the second idea here. Location is king. Okay, location is king when it comes to identifying reversal patterns. I'm going to go back on this screen. And so if this is a reversal pattern, where is it reversing from? Well, it looks like it's reversing from Neverland. There's nothing immediately right here, right? This one here, where is this reversing from? Immediately, it looks like Neverland. So location is king. Is this forming at a support or a resistance? Let's just say location is everything. Let's just change that. Okay. We ain't patriarchy around here. Decentering. Anyway, location is everything. So is it at support and resistance? How long has the move been before that pattern appears? Is it at the top or in the middle of a range? These are questions you got to ask because location is everything. All right. And the third thing I would say is um, moving averages help. And really, with moving averages, if you understand price, then you don't need moving averages. But if you were to have moving averages on here, it would give you a little bit of an indication that the market is actually in an uptrend. We're going to talk about this because it looks to be like an M pattern. And let me actually put this here so you can see, so you can go back in time. All right. And so moving averages help to tell the story. They add conviction when we're trading to help us to know what is considered to be a trap or if it's something that we should actually participate in. Okay. And so moving averages are a big indicator of the fake M pattern. All right. So let's put this here so you can look at that together. And these are the things I believe in studying because if you're going to be a master at these patterns, then knowing when it does not work is also very crucial. It's a very crucial thing. Okay. Now, the fourth thing that you should know about these fake outs while trading is I would definitely encourage you to watch what, not watch, watch what happens after the candle closes. Okay, very important to watch what happens after the candle closes, and to pay attention to all the details that the market is giving you about the pattern. And then the fifth thing I want you to know is that smart money uses um, they use these patterns against the retail trader. Okay, I know y'all don't want to hear this. I get it. Smart money uses these fake patterns against the retail trader because they know that the retail trader is taught to look for a certain pattern. Okay, and so if you come to your chart, let's do this real quick here. If you come to your chart, I'm going to take this down in size because it's very large. Let's do 14. If you come to your chart and you see this and you say to yourself, I'm going to throw a line chart on here, totally an M. I'm ready to go, ready to sell. Again, let's talk about it. Not every M&W pattern is a reversal. Where is this reversing from? Well, I don't see anything immediately that this is reversing from. Now, keep in mind, if it was below this level, perhaps, but even the candle that closed to give you this quote unquote second leg, it's still closed above this level. Let me get some tea. 1 second. Let me get some tea so we can cook this chart real good. Okay. Even that second leg was above the level. So where is it reversing from? Now I'm sure we could probably put a line on here and go back in time and find that, but we shouldn't have to. We shouldn't have to. Okay, so yeah, kind of reversing from here. When the market broke through here, it retested and then fell. But was that a strong move? Not really, because it fell to here. It just pulled back to this level. Now you see this, you're like, well, it fell to here. Okay, so this is more of a pivot. This is more of a pullback. Now, just having that conversation, location is everything. You can see that this market is actually making higher lows. And so to take an M pattern in an active uptrend would be one of those things where you have to pay attention to the location. Moving averages help. Let me throw on the moving averages so you can see the pattern here. I don't have time to really explain all of the moving averages or the patterns or how to use them. But if you pay attention to how the moving averages are positioned on here, you got the 20 pointing up, you got the 8 pointing down, you got the market above the 200 and the 400. These are all simple moving averages. When you take a look at that, you might say to yourself, well, and this is not always the case, but well, this is right above all the moving averages, and the location, it's after an uptrend. Moving averages help, so pay attention to how those are appearing on the chart with the trade, and then understanding what happens after the candle closes. Let's take a look here, and let's put it on this. We'll put it on that, and we'll put it on candles. So once we had that market show us this pattern, right? It showed us the pattern, what happened in the next session. We really didn't get any sort of bearish activity, right? You didn't get anything bearish. And so when this candle opened, if you were anxious to get in, you didn't get anything that went down, and really would have been an indication to get in on the other side. Okay. So those are the 5 things that I would say I learned about fake outs while trading. And most of this has been a conversation from 2026. I wasn't really drilling down into the M and W patterns to really know the difference between when the market was using it to fake traders out versus just a pattern. I wasn't that dialed in. So drinking a little tea over here because it's early. Wasn't that dialed in. So hopefully this can help you to really understand that even in mastering these patterns, that doesn't come with just looking at it one-sided. It's coming from the understanding when it doesn't work. Why didn't this work? And the more that you can gather from a trade that is according to your strategy that didn't work, then you can grow. Like, for instance, let's just say you thought that this was an engulfing candle, and you said, well, this is an engulfing candle. The market should be going up from here. Why didn't it? Well, again, what we talked about is that not all patterns are either reversals, and if it's an engulfing candle, it should be a reversal pattern, right? Technically, uh, I said engulfing, but yeah, engulfing should be a reversal pattern. It should be finding a bullish engulfing candle at a level of support. That's what we ideally would want. And just continue that, the location, it's at the top of a run. You would prefer to have the market pull back and give you an engulfing candle and then go higher, right? Moving averages, it's above all the moving averages. Not that that's a bad thing, but knowing that it's above the moving averages and this close to the moving averages might mean that entering here might not be a good thing because it's so close to retesting where it just came from. And that's what it did. Okay. The candle that came after this candle, same situation where it was pretty much bearish. So it really didn't give you an opportunity to go long. Really did not. All right. And then smart money, again, using that pattern to say, well, this might be a breakout. It's above here. It's above here. This big candle here. Not that the market didn't continue higher. It's just positioning, timing for your entries so that you have a lower risk entry, probably here, continuing the trend from there. Okay. So again, in that same example, if that's not an engulfing candle because it's at the top, this market pulled back a little bit here, gave you an engulfing candle here, that would have been a better entry to qualify this trade. It's in line with the moving averages, and then you could have entered there. Okay. So something to know about mastering these patterns is also mastering when they don't work. That's going to transform everything because it helps to know when you should or should not, or when you should do the opposite. This helps you to know when you should or should not, and when you should do the opposite. Okay. So thanks for watching this video. With the value that you got, make sure you drop me a comment. Let me know what part was the most eye opening. Till the next time, trade safe. Take care.